All right, looks like everything's up and running. So how y'all doing? It's Friday. Software and chips are making a comeback. Even gold started to put in a little bit of a base before it closed. Oracle, CrowdStrike, Microsoft, Zoom, and then all the chips. Well, some of the chips. Yep, the game continues. Got the SPX breaking out on the day. It's very likely making a run towards the upper ADR, but I don't know if it's going to get there. Don't really have a lot of topic requests today, so we might do a deep dive, kind of look around at the various things, breadth, VIX, kind of see where we're at and if this run has room left.
Sounds good to me. CTA positioning, that kind of stuff too.
Yeah, we can look at the CTA positioning. The place that I do that at just changed all their stuff around. So I'm willing to do that just so I can go over there and kick the tires and see how their new CTA and VC charts look.
Just make sure there's not a knife in your shoe.
So there's this company called Gamma Lab, and they were a really easy place to use back in like last month, and then everything changed. They went to a query base system, so you have to use a prompt for everything. I mean, the news feed is just a news feed. That's easy enough. Their blog posts are kind of handy to keep us moving in the right direction and see what they've changed. But if you want to see any charts or anything, you've got to give it a prompt. And their VC charts and CTA charts were not ready when everything went live. So was waiting for that to get updated. Just do chart gamma. No, I already got gamma for the day. Systematic CTA exposure in the SPX, and we get this chart. Now, by itself, this isn't that bad. It goes back to May of last year, so it's a 1-year look at CTA positioning, but we can pop it out, and I believe we can zoom out. So if I roll back the mouse a little bit, yeah, we got 2012, 2013, 14, 2020, COVID, 21, 22, 23, 24, 25. So CTA positioning, that if you notice, it's like this big old range, a bit like a stochastics formula. Man, I've been dealing with engineers about developing like a relevance ratio formula, and my brain hurts. But this is a bit like a stochastics. It's range bound, and that should make sense because it's CTA positioning. They're not going to just keep buying and buying and buying or selling and selling and selling. Sooner or later, they'll change the direction of their portfolio to where they're kind of capped out and they don't want to buy anymore and they end up selling off, or they are as short as they want to get and then they end up turning things around and buying their way back up out of the hole. So one side or the other, right? And right now we are not at the lows of the zone and we are not at the highs of the zone. So we're off of those highs. Maybe you could say that we had made a trip towards the middle and then we rebounded at the end of March and was trying to push our way back up, which seems to have stalled. Think about what the S&P and the Nasdaq has recently done, where we're still hanging out up there near the highs, and yet CTA positioning has stalled out. And like we made new highs yesterday, for an example, and we're down today, but we're still above the 10, and we're still above the lowest point of the week. So in all reality, we're not down at all. But if you look at this, we topped out and then set a lower high, and it's very likely that we might set a lower low in here. So this is CTA positioning right now. They're they're positive, we can say that, but they're not at extremes. I think they're holding on at a good level, somewhere above zero and not capped out. So what we want to ask is, what are they doing from here? What's their projections for the SPX if we happen to go higher from here or lower from here? And a lot of these places that offer us CTA charts offer us a chance for those projections. So we go back to chart, systematic, CTA positioning projection right there. The first one I did was exposure, showing us where is it. And this one is asking what's going to happen if. So we run that, and now we can see sort of a hypothetical. If the S&P stays in a moderate uptrend, then they're pretty much just going to sit tight. They're not going to sell off more, but they're not going to add any. And if the S&P goes into a moderate downtrend, then CTA positioning is likely to deflect back into the zero range. And of course, we can kick this one out as well. So this is telling us we're not expecting to get any help from the CTAs. Now the VC funds, the volatility control funds, they might be having a bit of a problem. Earlier today, we had the VIX dropping relatively well, all things considered, and yet the market wasn't making moves off of it at all. Yeah, here earlier today, it was this drop that I was watching. And if we kind of line that drop up, the S&P had sold off, and then we were just kind of sitting here in this range. And we were still within, we weren't even close to the high of the day yet. We were still within the 5-minute candle, and the VIX was headed strongly to the downside. Broke new lows on the day and managed to sink below that $18 level, which is kind of a big key level in the VIX. So, bonds, treasuries, they're bullying the S&P, the Nasdaq, and the VIX isn't necessarily to blame for the moves. So it's just kind of being dragged along. It's not overly helpful at the moment. And I don't know what the VC funds will do in a situation like that. If they, I'm sure they use a broader metric but we can also chart those VC funds. And it looks like they are still allocating back in after that drop down into the March lows and the recovery out of it. They had a little bit of a pullback and then they just continued to push higher, broke the last pivot to the left, and they're still pushing. So VC funds aren't back at their all-time highs or previous highs. If we zoom out, you can see that it wasn't the highest ever, but these are some pretty strong highs, and we're not back to those levels. We're not even halfway back from the drop. If I was to snap some fib here, put a line in the middle, we're not even back to the midpoint. But we are beyond the 786. We've turned around nicely, pointed to the upside. Doesn't look like it's slowing down yet. Looks pretty good, really. And we can do projections for the VC funds, just like we did projections for the CTAs. So if the S&P continues with a moderate uptrend, then the VC funds will continue to allocate to the upside. And if the S&P turns into a moderate downtrend, we've got a stronger sell-off in the VC funds. So they will sell quicker than they will buy right now in this scenario. And of course, we can pop that out too. These pop out charts, they seem kind of cool, but if you after you pop them out, they don't last very long before they kind of freeze, and then you can't do anything with them and you have to like go do the chart again. But I don't know any other place that has this level of interaction with the VC charts and the CTA charts. Maybe Mentor Q has something similar, but not the same. Definitely not the same. So we're not going to get CTA help if the S&P continues to rally, but we will get VC help. So one thing that I've been looking at over the last week and a half is the broader market breadth is really kind of turned down. See if I have it saved in this view list. I really need to clean up my list. All right, this is NIM exposure index. We can see the downturn in the MACD and well, PPO, MACD, it's kind of the same thing. And we can see the number drop off here. This is just one thing by itself, though. It's we can look at a lot of metrics to start to define market breadth, like individual markets, gold miners, bullish percent index, the S&P percent of stocks above or below their 200-day moving average. This took a bit of a tumble. It doesn't look like much, but the see if I can put this on another screen. What do I want to do here? Open, I want to open an image. There we go. Open image in a new tab. That way I can zoom in and it don't distort. The red and green here is what we want. The orange is just the S&P in the background. That's not what we want. So we were running at like a 61.8. It's kind of a blur there. at 67.8. So we were up there, then we fell down. And we can see that in greater detail if I zoom in over here. So there's that drop. That's breadth that was dropping right there. That's how many stocks are above their 200 period moving average in the S&P. It was like 57 stocks. Now it's 52 stocks. That doesn't sound like a lot, but it's a radical change. You can see the historic norms because of the chart level. It goes back to 2017, and we've got this sort of strong top. The mid 80s is a pretty high level. I got that red line in there around 70. If we're above 70, we're in a good market backdrop, and that's the sweet spot in swing trading. And we haven't been up there since like 2024. We got close to it in late 2025 and mid 2025, but we haven't been up there for a while. So we're still underneath that level. It makes swing trading more difficult. It's a real stock pickers market, and you don't get a lot of strong correlation. And we're losing it. We're fading off on that. So that was a downturn in market breadth. The 200 isn't a bad chart, and there are symbols for that. If you go to like Thinkorswim, you can see how many stocks are above their 200, how many stocks are above their 50. I don't remember the symbol for Thinkorswim, but I bet you can either ask Google or ask an AI, and you'll get like this market breadth symbol that you can use in Thinkorswim. And we got the dollar making a push to the upside. $100.50 is a really big level in the dollar. It's kind of like one of those key levels, historic levels. We're going to have trouble if we get above that.
It's just so much hype. I mean, I'm sure, you're every day talking about, the upcoming anticipation of the SpaceX IPO. And, we
Not sure what this. I'm muting that guy. If you can't unmute yourself later, let me know and I'll unmute you. But it's some video playing in the background. So the dollar got that black level there. It kind of formed a support around that. Usually we chop about back and forth through that level, but we did just come off of it. We're making a move up. We're likely to get stuck around that 100.5. We'll find out next week, kind of see what we're going to get out of it, This is a weekly chart, so the week's about over. That's helpful. Earlier this week it wasn't all that much. Skew index, not really helpful for what we're trying to determine at the moment. But you can see that the PMO is below zero. The PMO is just it's another indicator on the platform here. Range bound, it's a bit like a MACD. But the thing is, we are below zero here. That's what we want to pay attention to. We can have prolonged weakness, and we can start to see the market hedging under that level. And, well, we are below it, right? We crossed through it a little bit ago. I should probably put this on a smaller time frame so we could see it. I've got it running back a couple of years, but even when we were above it, if we're only one above or one below, which is what we've been in this sort of range for a while, that's not helpful because then we're just crossing back and forth through it and we're not staying above or below in a prolonged period of time to give it some good value. Just crossing back and forth is violent mess. Another point of view of the skew. Only now we're on a weekly. So we got that same PMO on the weekly getting below zero. And that's more of a big deal. That's happening now this week. And it's not cool. You can see the SPX down below here. When we got below it before, now we didn't stay below it. We just dropped it down, turned around, and came back up. But look back here when we did it in that 2022 bear market that we were in. And if you think about that January into February 2022, a lot of people still didn't believe that we were moving into a bear market. They kept trying to buy the dip, take the longs. They thought that the Mag 7 was on sale and they were going to get some, and they just got crushed. But PMO on the weekly for the skew was already below zero, and it had been a strong drop from the highs. Once we got back above zero, then we were able to work our way back out. So this might be nothing. It might end up just like this one and turn around relatively quick, but seasonality suggests we're going to get a pretty healthy pullback. That's my breadth list, but I've got some preset breadth charts that came as part of a package. When you have an account at Stock Charts, they have these pre-made chart packages. Some are free, some you have to buy. And as you can see in the naming here, we got advancing minus declining market breadth, and then we got moving averages breadth, the bullish percent indexes, and the sector specific bullish percent indexes. And then we got sentiment and ratios. So I don't have to go in and build out my chart packages. I can just use those. We'll do the advancing minus the declining one first, because this stood out earlier this week with that decline. To kind of give you some feel for what we're looking at, there's that sell-off down into March and then the March recovery. But look how this thing flattened out. Remember what the S&P looks like? We made new highs yesterday, right? I want to keep reminding people what that S&P looks like, because where's our new highs here? Where's that strength? We haven't had it for a while. We've been topped out. Once we got into April, we put in a top, and we've just been, violently chopping back and forth with a big breakdown today. But this week, I don't want to zoom in on this page. Image and new tab. Look at this tight little range this week. There's our declining issues. Big number. There's our advancing issues. But I mean, yesterday we had some big moves, right? Everybody was so excited because the president was going to sell all of our trash to China. Whatever. So big day yesterday, but for the week, we've been hanging out below that halfway point. That black line is 0.5 half. We haven't had anything good all week, but if you look at the declining issues all week, we've been above that half, except yesterday, right? When everybody thought China was going to buy all our junk. So another signal on breadth just being really poor right now. This is another one that you can kind of build on Thinkorswim. You have the NYSE advancing issues and you have the NYSE declining issues. So you can, on Thinkorswim, you can put together an advancing minus declining issue chart by combining those two symbols together. All right, this is the same thing, but it's the NASDAQ instead of the NYSE. All right. So you guys know what the NASDAQ's been looking like this week. Straight up, 45-degree angle. Same thing here, just a big down day today. The decliners are almost to the orange line, just a lot of negativity there. All right, new highs versus new lows. Well, I guess this is just new highs, not versus lows. The new high numbers really not hitting the 200s, not getting into that 220 zone. Look at earlier in the year when we were hanging out above 150, 180. We're getting into the 400s, but right now we can't even get into the 150s. This one is the NYSE. This is the NASDAQ. And this one is the SPX. And then the SPX mid cap and small cap. And the NDX down here. There's our new lows. So for the NYSE new lows, it's starting to tick up well. Let's send this one over to a new tab. So there's our uptick in new lows, and then that explosion this week. Like I said, this week I was a bit surprised by the advancing minus the declining issues. It doesn't look like much, but we were in a nice steady increase of stocks hitting new lows, and then we almost doubled the number. Granted, we went from like 20 to 40, but still, or from 40 to 80 before we faded back down today into the 40s. It's still a big change. You go 100% greater than what you had yesterday. That's a big change. So we're not into the really nasty stuff like we had late March and April, early April, but it's moving up, and that should be getting people's attention, right? Same thing here. Since we got into May, it's been a steady increase. We're not hitting some big level numbers, not getting into those extremes yet, but we're working our way up. If 550 to 600 is sort of the ultimate nastiness, then getting close to 300 or getting above 150 means we're getting into some higher levels of nasty. Same thing here. Now this one is the S&P. And if the 40s is nasty, then getting into the 20s would be halfway there, and we were there this week. Right? You see, like 30 and 40 or 30 and 20 is a zone that we don't really want to get above too often, and we were pushing into the 40s this week. So when we look around out there and we ask, hey, how are we doing with the broader market? Not that good. We have a concentrated few sectors that are carrying us, and everybody else is either suffering or just flat zombies. Not helpful. Same thing here. Push to the upside over the last 5 days. And here. So we think about the last 5 days, having this sort of negativity isn't really what would come to mind, right? Not when we're making new highs in the S&P yesterday. Okay, this is highs minus lows. Guess I might as well just zoom in here. Maybe. Or not. I'll have to kick them.
It'd be kind of nice to have some of these for toss.
Yeah, some of them you can make on Thinkorswim, like the advancing minus the declining. You can do that. It might not look like this histogram bar unless you're better able to code, but with no coding at all, you can just put in the advancing minus the declining. So when we take advance minus decline, we can see we're at 87 on NYSE. This one's the NASDAQ, SPX, but we're really low numbers compared to when things are better. And today we're up, but we were below, for a couple of days this week. Red days, red days, red days. So if you're on Thinkorswim and you're looking for those charts, you got to start with where are the charts. All right, and then you can of course mix charts together. I don't need this quick chart. Get rid of that.
Are you a swing trader?
I am a swing trader, yes.
Do you what's your process? Do you weekly look for pullbacks, or do you look for I don't know, anything that's looking like it's about to set up?
I am a very diverse swing trader. I do all kinds of things. So I have chart patterns that I like a morning star reversal, evening star reversal. I've got bottom fishing strategies and all-time high strategies. I've got runs into earning trades, or this company already reported earnings and we're going to leave on the outside of it trades. I'm not one generic little rubber stamp that only does one thing.
Okay. And when do you query on stocks that have already had earnings, or through Thinkorswim's platform?
I don't, but you can.
Oh, okay.
I look at my list, right? And then I just look at when's earnings. You know what I mean? I don't go hunting for a basket of stocks that have already reported, or a basket of stocks that won't report anytime soon. I don't bother doing that because it doesn't help me. It's not relevant to me. But you can do that. So one way to do it is to add earnings to your watch list column so that you can sort by what has earnings really close or earnings really far away. I believe it's just a custom watch list column that says is earnings within X period of time, 3 days, 5 days, 3 weeks, 1 month. Otherwise, just build it into your scanner so that whatever you're looking for will eliminate earnings by whatever time frame you're looking for. But I don't want to find a basket of stocks that don't have earnings, right? That's not my goal.
Yeah, I was going to say, do a Google search, Kimberly. You'll find that there's tons of scripts out there already made.
Okay.
Yeah, just Google it. You'll find it.
Okay.
On Thinkorswim, you have the drop-down menu right here. And in that drop-down menu, you've got indicators right here. It might not be there if you're on paper. But when we click on the indicators section, now we've got all these market breadth charts. So if you want the NYSE advancing issues minus the declining issues, there it is. Or the NASDAQ version, or Russell, or S&P. You got advancing minus declining volume, stocks making new highs, stocks making new lows. They're all here. So even if you don't know what the symbol is, you can scroll down through this list and find what you're looking for. You can get just decliners, just advancers. They're all here. So there's your drop down. And then just move over to indicators. And you can find the market breadth signal that you're looking for. Now, once you find it, you can write it down, save it somewhere, build a whole watch list of these things. And then you can just click on the watch list and bring up the one that you want.
Okay.
So
thank you.
This will be really helpful if you want to rebuild all of those market breadth charts in your Thinkorswim. And at one point, I did go through and do that. But I've got all these different platforms. And so I stopped really looking at the advancing and declining and a lot of these market breadth tools on here, and instead focused more on stocks, options, things like that. And I used my other platforms for the market breadth. But I might still have some charts saved if I was to dig around. It's possible.
Okay. Yeah, I'm using FinViz right now. It's pretty good, but I know it's leaving some things out. So I was just wondering what you use to scan or filter. Okay.
What I like to do is I got a list of things that I'm interested in. Like I've been looking at quantum over the last day or two,
Me
and
too.
EVs. I've been looking
Mm-hmm.
at EVs. So I bring up my EV list and I look at what's in them. And if they have earnings, then I recognize, hey, watch out, it's got earnings. So you know what I mean? Because I'm looking at EVs or I'm looking at, quantum. I don't want to look at earnings. Earnings is just something I need to be aware of and or avoid.
Mm-hmm. Okay.
Good way to go too is, you got your watch list of whatever, and then you go out to the weekly chart or your daily chart and you take a look at what's there. That's that's always been real useful, real valuable for me. It's what we used to do when I streamed every day. For an example, we had the Dow Jones as our number one index, and we would just put them in alphabetical order and go through the charts and just look at what do we have today. You know, really that it was just like, what do we got? Are we, bottom fishing, breaking out into new highs? Is it setting us up for a trade tomorrow? And that's what we would trade. So
We need to twist your arm, man, make you get back into doing that again.
yeah, I mean, streaming all day every day
Well, I
kind of
wouldn't do it all
sucks.
day every day. It'd be like the first, 4 hours or something like that, or in the afternoon, something of that nature. You know,
What I
trade it.
found was if I tried to search for some specific thing, um, breaking out today, making new lows today, morning star reversal, evening star reversal, it either wouldn't find it, it would find other stuff. Like I would say, hey, give me an evening star, and it would bring me some trash, like nothing even remotely close to an evening star reversal. I'm like, why did you bring me this? What? I don't want this. What is this? So I got tired of all of these different scanners out there failing to find what I'm looking for. And instead, what I decided to do was just go out and look at every chart on my list. If I cycle through my tradable list of stocks and none of them have a trade setting up, then I guess I just don't have a trade. Otherwise, if it's on my list of tradable stocks, once I'm on that chart, I can look and see, hey, do you have anything for me today? Is it making new highs like Apple, at least 52-week highs? Is it making new lows? Is it an evening star reversal? What do you got for me? Where's earnings? No, we're good. Earnings is already done. That we're done with dividend. And I can just evaluate this chart. If it doesn't have anything, then I can move on to the next one. And I like looking at what could be, and the scanners don't offer me that. So I'm looking at Apple right now and I'm thinking, if we gap down Monday and um, get like a turnaround Tuesday, we could get new highs, get above 305, maybe even make it into 310. I'd really like to see how Monday sets up. The scanner can't do that for me. It's just going to look at this and say we don't have a gap down because it's not Monday. It's not going to tell me to watch Apple on Monday. So I like going out to my chart, seeing what I have, and asking questions about what do I need here to get a trade? Can I set an alert, write some notes, add this to an action chart for Monday? What do I want to do with this? That helps me find tradable opportunities. This looks like it overshot the 1, 2, 3, 6. Yeah, it got there. We got one red bar, which is our OCC. That lines us up. Oop, missed. Now we got that 305, 311. But I found that the scanners just doesn't help me with my style of trading.
I need to talk you into maybe covering some of your FinViz scanners that you were showing last week, or I think it was last week. That would be something to look at. Because I know right there you can scan through like 10 charts at a time, man, to find positions too. That would be another thing.
Yeah, it's really nice. So on FinViz, I bought a 1-year sub here, got it on sale, I think 40% off. If I had waited for Black Friday, I probably could have done better, but I don't know. I feel pretty good about it. My scans that I've got are like the starting position. The Think of a scan as like layers in a cake, and you want to break things apart by layer, adding on as you go. At least that's what I like to do, because my goal isn't to have this wide basket of stocks. My goal is to have a very narrow basket of stocks, or maybe no stocks at all. Think of it like a funnel, right? So we start out with this really large universe of stocks, and when I'm done, I want to have a very small universe, or just nothing. I'm okay with nothing, because I don't want to go chasing my tail looking at a bunch of stuff that just isn't worth my time. So these scanners, this is like my first layer of the cake. Bullish swing on a pullback. One name. That's pretty thin. one name. That is not really helpful. That's bearish swing. That's the wrong one. We need bullish swing. What did I click the wrong one? There we go. 5. So they're
What
already bullish names, and they are pulling back right now, like Intel, ScanDisk, Monster Short. I believe that's Monster Short. Maybe it's Monster Long. Yeah, it's Monster Long. 2x and 2x AMD.
Seeing what's your all settings when you click on all at your tab at the top above your charts?
Yep, we'll get there. The this is what I'm running, but it's not correct, because normally I would have that set to USA, and I think I didn't do that because there was some China stocks that I wanted on my list.
Mm-hmm.
So I left it with any, but normally I would set USA as one of my filter levels. So I'm going to just add that for any. Feel free to turn that on. Beta over 1. I like to have an ATR also. You'll see it in my other scan, because we're going to get into it. But you can use ATR over 2 or ATR over 1. Depends on how many names you get. Remember, I don't want a lot of names. So if I use 2 and I get no names, I'll turn it over to a 1. If I'm on 1 and I get a bunch of names, I'll put it on to a 2, right? Just trying to dial it back a little bit. Then, are they optionable and are they shortable? I don't have any interest in shorting stock, 0. But they're a combined sentence. Is it optionable and shortable? The output that you get, the list of stocks, I have found if I say I don't want it shortable, it'll kick out things that I wanted. So I just make sure they are shortable and that they are optionable. Average volume is another one that you can play with. If you have too many in your list, then jack the volume up higher. If you have nothing in your list, turn the volume down to a more acceptable level. You have to be willing to adjust volume, because in a highly correlated market, say bear market, and everything's red, everything's down, there's high volume everywhere, you need to turn the volume indicator up, right? If it's a really crazy bullish market and like only the Mag 7 are running and everything else is sitting on its hands and not really getting volume, then you need to turn the volume down. So you have to be willing to play with that volume along the way. Now, the performance on the month, I was looking for bullish stocks on a pullback. I used 20% on the month, but say you're doing the scan in the first week of the month. That's not really helpful, right? So be mindful, where are you at within the month? Be willing to change that to performance on the week. Say it's the first week of the month. It'll still read monthly, but if it is the first week of the month and I've told it to show me things that are up 20%, we're talking about something that went up 20% in 1 week, the only week of the entire month. You know what I mean? So be willing to adjust as needed on something like that, because we're looking for bullish names that are now experiencing a pullback. The pullback could just be for today. It could be based on how much we went up. My week on how much of a pullback do I want? I want the week to be down 10%. But again, that's relative. If it is the first week of the month and I had to set that at like 10, then I can't have down 10 at the same time. I'm going to have to set that to like a 2 or a 4. So you just have to be mindful of where are we at within the month.
So you pretty much have the same, that's my query. I'm using everything you're using except for I have performance quarter plus 20%. So that narrowed me down, and beta over 1.
Yep, I got beta over 1.
And average volume over 2 million.
Now this is not a bad way to go, right? This is looking for stocks in a pullback. I also like stocks that are breaking out into all-time highs. I like stocks that are making new lows, or reverse all of this and have a bear market scanner with stocks in a pullback in a bear market instead of a bull market, right? It's the same scan, just flip it over for the bear side instead of the bull side.
But I noticed that my query, it pulled up some really stocks that have all-time highs and just have a week or so, I mean, 1 week down. But some of them are kind of slow movers. I'm looking for, I was hoping it would add some stocks that had momentum. Some of these can be slow movers.
Change your ATR, your average true range.
Uh-huh.
Change that, make it higher.
Okay, I have over 2, so I should make it higher than over 2.
Yeah, if you're finding, well, I mean, beta over 1 is okay. Try going beta over 2.
Okay.
Because if you think about beta's definition on Thinkorswim, it says that beta represents how much this stock would move versus the one move in the S&P. So if SPY moves $1 and your beta is 1, then your stock should move $1, right? If SPY moves 1%, your stock should move 1%. But if you have a beta of 2, if SPY moves 1%, your stock should move 2%. That would give you bigger movers. And
Yeah,
then
good.
ATR also would be bigger movers.
Yeah, that's what it did. I think I'm going to take off performance quarter plus 20%. I'm going to
That
move
one's
that
not
down.
bad, but the reason I didn't use that one, I was worried that it would see what that one does for you is it makes sure that you're finding like healthy, good companies.
Mm-hmm.
I don't know if good's the right word. Healthy is a good word. You're
Mm-hmm.
finding healthy companies, and that's fine. I was afraid that it would limit me, say, not take something like GM or Ford or something like that. It would look at it and say, no, they didn't do well on their quarterly, and then it boots them out of my scan. And I would have traded them, so I didn't use that one.
Yeah, so that's why I'm gonna maybe make it week plus 20 to 10%, 10% or something, quarter plus 10%, maybe something like that. I just have to play with it.
I do love the themes and the sub themes, but they don't have all the choices in there. It looks like a lot of choices when you first get in there. You're like, oh, wow. But if you want to be kind of specific, say like drones or, pot stocks or something like that, I had a hard time finding what I was looking for in here. Same thing with the sub theme. But still, I mean, I'm not complaining. Having something in the theme space is better than nothing, which is why when I want to look at, say, semiconductors or quantum computing, I like that I can, that's pretty awesome. So my scanners that are in here are those bullish stocks that are having a pullback and bearish stocks that are having a pullback. And if you'll notice, I have a part 2 on the bullish. So we'll just go bring this one up. 75 names, which is much different than the other one, which had like 5 names. This one is more relaxed. So we'll put it back on the all setting. Down on the week, no percentage on how much it's down on the week. And
Mm-hmm.
up on the month with no percentage on how much it's up for the month. Those are the
Mm-hmm.
2 biggest changes for this one. This is my
Mm-hmm.
broad basket of stocks. And to be fair, a lot of times when I run this scan, I'm not looking for anything to trade at all. I'm really looking at, what are y'all doing out there? You know what I mean? Like, well, what's going on? Who's up? Who's down? I don't mind trading something that might show up on the list, but I'm not using this list to find a trade as much as I'm looking at what sectors, what industry is up on the month and may be experiencing a pullback this week. And that's why I left the percentages off.
Yeah, well, when I changed that quarter up performance, leaving out the percentage, that gave me some stocks I was looking for, like CoreWeave,
Yeah.
HIMS, Intel are in those that have pulled back some that might be a good look to get into. So I'll check these out.
Yeah, software is doing really good still, It's not slowing down at all.
I was in now, but now shook me out a
Oh,
couple of days ago.
oh no, you didn't get back in?
I forgot I got into others and then I looked at it today and now it's up 6%.
Yeah, it is. It it's been hitting my bull scanner all day.
So now I'm thinking, well, right now it's pulled back, so I'm hoping next week it'll pull back a little bit more so I can jump back in. But I think it's ready to go.
I'm thinking
So
it's going to get this gap close 103.7.
yeah, gap.
It's the gap down from earnings.
Oh, I see it. Yes, yeah, yeah.
Now, some analysts, and I don't disagree with them. I do it differently. Some analysts will use their daily chart and they'll say if price gets anywhere inside of that candle, then the gap is closed. I understand why they do that, but I don't do that. For me, if we closed at 103.07 and then we gapped down, then we have to get back to 103.07 to close the gap. Because
Absolutely.
that's where we were. That's where we got to go.
Yeah.
But I have seen trades that I'm in where I'm like, oh yeah, I'm going to play it to the gap, and price will run all the way up and it'll tag that candle and fall, and it never gets back to the actual quote gap close. So I know why analysts do that because I've seen it happen to my own trades. On the other hand, though, I've seen it go to the tick right back to where we were and then fall. So I just stay with what I've got, but I do reduce my position size when we're getting really close to touching that candle so that if we gap down overnight, I don't lose a lot of my position. Say we open the next day down here somewhere and then I get whacked and I end up either in a loser or I give back a lot of profits. So I take a lot off the table when we get near that candle.
But you know what I use? I use fibs. Your fibs. And when I see it get to a certain level, like the one or the 111 or I look at the 78.6, I think. I use 76.4, but once it gets to that level, I start getting antsy about setting my stop because it does a reversal on the 76.4 level. But if once it closes above 50 and 618, I'm golden. I'm good for another for a few moves up.
Now, there's another thing about now that's worth considering, and it's this old market phrase that says, if 80, then 100. And as long as we're above 80, it's likely we're going to go to 100. If we get underneath 80, it's likely we're going to go to 40.
Mm.
So that's something to consider too, that it's been front run. They've been protecting that 80 level, and we haven't gotten to it. Even if we get to it, we might get underneath it and then rally back by the end of the day. But as long as we're still closing above 80, we have the opportunity to go to 100.
Well,
But
right now it closed above the 20. It's about to close above the 34, and it just has that 50 moving average that it's got to contend with.
we just have to be worried about that 100 now, because if it's making that move to the upside, it could stall out before we get to that 100. So that's
That
trouble.
Yeah, that kind of what bothers me about the 50 still being above, because it could be a kiss goodbye for another move to the downside.
Yep, we've seen that 50 all the way back in November, December, and then February, and then in April, and it hasn't been friendly at all. I want that 50 to flatten out and then long term start moving back in the other direction. But we're talking long term, like from a bottom fishing play, now is a good one for 18 to 24 months. This is a good bottom fishing play for a long term trade.
So for leaps.
Yeah. Yep. But it doesn't meet my qualifications to take that kind of trade yet. Right. So I always use Carvana for this discussion. The beaten down dog of Carvana.
Yeah, that was a kick-ass uh, move down.
So there's the drop and that 50 chase with the tag and tagged here. And then we got down, sub $5, and it finally stopped falling. And that 50 flattened out, price got above it, but we kept coming back into it because we hadn't fixed the 200 yet. Then we turned all the moving averages around except the 200, and then we flattened that one out. And I believe we came back and tested the 200. Then we started working our way back up. So as you can see, there's a lot of work that now needs to do before it can be a quality bottom fishing reversal, but it's on the list. And if you look at now, we would be, say, in this frame here, maybe here. No, not here, because we're still under the 50. Maybe back here or down in this section. There's plenty of room for traders if we was to be getting in, getting out, 6-week trades, 5-day trades, that sort of stuff. There's room to play here, but I wouldn't take now for an 18 to 24 month trade yet, because I want
No.
it above that 50 at least.
And it's still, to me, far away from the 100 and 200 as well.
Yeah, the reason I'd be willing to take it above the 50 is because it would be a good run into the 200. That'd be a nice target for me.
Nice
But
magnet, yeah.
yeah, but we'd still have to be ready for that pullback, and probably a violent one too. When we did get there, probably take one heck of a smackdown.
Yeah. And this thing has been hard to trade. Oof. I was in it. It was like riding a Bronco. I was like, okay,
It's a gappy bugger too.
yeah.
So after earnings, when we gapped down, we created this island, and right now we are in this sort of a bear island reversal. It's possible that we end up gapping out of all of this on some sort of news or something like that. And I don't know, I think I might like that better than just grinding our way back up. I'm not opposed to the grind, but if we gap out of this and we show up somewhere up here, then we've completed the island reversal. If we
But
just
you don't
grind up,
think
that's
that
different.
you don't think that when it gaps up, you still have to cover that gap that it gapped up from?
Well, if you look at island reversals, a lot of times when they form correctly and we gap out of them, we end up leaving them there for a long period of time. Eventually they get filled with like another earnings or, something like that, but it's a gap that usually sticks around for a while.
Mm-hmm. Okay.
BSX is still getting beat down. Pharmaceuticals, I'm not interested in. Pfizer, Verizon, Comcare, none of those guys look good. I mean, just they look horrible.
I don't know, Comcast, I think they're in a lot of trouble.
Yeah.
Hmm. They're people are just letting go of their cable and they're cordless. They're going cordless antennas and stuff.
I don't know one person who has the old cable boxes.
I was with AT&T for years, and when they were bragging about that they took over, what was it? Not Dish, but the other company, and I winced when they that went through. And sure enough, it was like they hemorrhaged after that and kept hemorrhaging. And then they started having town all hands meetings
Damn.
of people being, let go because we were burning through cash to keep that company.
Give me just a second. All right, I'm back. I was thinking that the trading desks were going to do better when we got past this PDT logic. And other than the Nasdaq, I haven't seen a lot out of that yet.
I think they're going to get ran over more.
So here's ICE, and they were one of the biggest recipients for futures. When they started getting more money out of that. I mean, look at that chart. When the micros came out, these guys, well, I mean, it was before micros. They were on that run already anyways, but after COVID, they had a little bit of a pullback, and then like mid 2022, they were just on a tear all the way into 2025. So now it's like, hey, you guys are going to benefit too. Where's your love? None. And the Nasdaq company, same thing, beautiful chart all the way up into these levels, but since they've been here, they had that big beat down at the start of the year, and they're not even back to decent levels yet. So I don't know. I kind of gave up on them. See what we got
Hey,
here.
Signet, are you
Yeah.
are you bullish or bearish on this market right now, man? Are you just kind of waiting because of all the economic stuff that's going on? You know, the volume hasn't been great overall on SPY and Qs, IWM, and all. It's been very low volume. From my understanding, a lot of these money managers and all that, they're just hedged. They're sitting in, a lot of them are sitting in cash, or they put it in the bonds for right now because they don't trust this market.
Yeah, I haven't trusted this market for a while. I mean, I've got trades on that are small, but I'm out of most of my mutual funds. I'm out of most of my ETF plays. And so it's more like stock picking individual stocks, little things like that, or things that I'm up so much in that I don't have any risk. Like I was in quantum and drones when they were, $3 and $5. So I've got so much room in there. I'm not even worried about it. But most of my longer term buy and hold, I'm out of all of that. I have been since the early days of Trump 2.0. They had made it clear that chaos was their game and they were happy to play, and I'm not. So like, okay, what I'm not messing around. So until he's gone, and either that or he becomes a lame duck and can no longer affect the markets the way he is, I'm not looking for my long-term plays like that. I'll hunt and peck and play individual names, short-term trades, but no longer-term buy and hold stuff into mutual funds and my ETFs. No. There's a book that I share all the time, written by Gerald Appel, the guy that is attributed with making the MACD. And the book was really like is it a time to be long the market kind of book? And it's all big picture stuff. What's the Fed doing? Is the S&P above its moving averages? That sort of thing. It's a real simple little checklist of, do we have this? Do we have that? And we don't. We don't have most of the qualifications that make it a good market backdrop for the broader market to be a buy and hold. So until we have that, I'm not interested in it. I'll just play the individuals players and be nimble, sit out a lot of stuff that doesn't have any damn liquidity, and play the futures because I got to eat. But nobody wants to hear that. And I've been singing that same message since Trump 2.0 has gotten in there. And I continue to pound the table month after month. But nobody wants to hear that. They all want to trade. There was a chart that I shared here earlier about how many stocks are above their 200-day moving average. And we haven't been above that 200 level pretty much since the new administration. And I like my money, so I'm willing to just hang out, play the smaller trades, be nimble if I can find something worth trading. Otherwise, screw it. Just trade futures and not even mess with the longer term account. This one right here. S&P 500 stocks above the 200-day moving average. When we're above that 75 level, it's not bad. You can see the S&P in orange. We tend to do well when we're above that 75 level. Now, the S&P goes up even when we're not above that level. But when you're looking at the broader market, you want to be able to just play baskets or themes. And this isn't the kind of market for that, unless it's AI. AI is doing good, but it's so crowded and it's thin. It's nosebleed levels that it just gets more and more overbought, overbought, and you got to be the sucker buying it at all-time highs with crazy options prices. No thanks. We dropped down out of this in the 2022 bear market and we haven't been able to hold above that level since then. We did peek into it in 2023 a few times, and in 2024 we were in this last little zone here. And then we gave it up, and we haven't had it back. That was the Trump tariffs of March 2025 when we rallied out of that, and we still wasn't able to get back above. It was like the end of Biden and Trump election was right there. I believe that's when it all really kicked off, right? Unless I'm off. Should be it. And then down we went. So we can always find a trade. That's not hard. But allocating large parts of my portfolio? No.
I haven't found anything I wanted to trade beyond 2 days right now.
Oh, yeah. But I mean, this week, not the week to be, hunting for that kind of stuff for sure. Everybody
Actually,
was looking at China trying to figure out what we were going to get out of it,
actually, I did trade UNH from last week, and it just burned rubber up the chart. And then I saw a supply zone, and it started pulling back. So I'm out until things start to recover.
Yeah, there's always something that we can trade. But the normal sort of longer term big allocation, I haven't had anything that I've wanted to play. And I've exited out of most of my baskets and just kind of just hanging out. And I'm resigned to be this way until he leaves or until he becomes a lame duck, one or the other.
Yeah. I need to go back and read my almanac and see what it says for next week.
Hey,
There's
Signet, what was the name of that book that you were talking about?
technical analysis, I believe. I've shared it in the chat. If you just search for any place where I've wrote Gerald Appel,
Lapel. Okay.
here
Is
I'll
that the
put it
one?
in the chat again because it's just a
Okay,
PDF. I mean, it's
good. Also, what's the book that has the website with it?
hit and run
The
trading.
hit and run trading. That okay. That's the other one that I want to get. All right.
Hey, Signet, I'm starting to get comfortable with the volume profile thing. I put on Trading View VRVP. You ever
Yeah,
heard of that one?
you like it?
I love it. I I really appreciate it. It's pretty cool. I'm still getting used to it though. I was watching it nonstop yesterday and the day before. And yeah, I'm just trying to get a rhythm with it in terms of those how jagged it can be, and show you areas where it seems like price moves up with no problem. And then the spiky areas where it just kind of, I don't know what those are. I guess those are institutions that are buying and selling. But I used it on UNH, and it seemed to, the areas where it was kind of hollowed out, that's when price just zoomed up. So I don't know whether I don't know what that was about. So that's what I'm trying. I need to watch a video on that, see what that means. But I like it.
The idea with these profiles, and it doesn't really matter which one it is, when you've got these large volume shelves, that's where it's going to run into, I'll just use the word support and resistance, but that's not it. It's going to run into trades, right? So it's going to run into friction. But when it's hollowed out or it's really shallow, it doesn't have anything to run into. So it can move through those levels up or down relatively fast. That's the idea behind it. If it's shallow, it doesn't have really any resistance in there. And by resistance, think of like weight resistance. If you're exercising, or parachute resistance. If you watch the drag races where they kick the parachute out to slow down,
Mm-hmm.
it's just holding them back kind of resistance. That's the idea behind either a large area or a shallow area and price moving through them. Historically, you should be able to look back and see that price was able to make swift moves through those zones without running into too much trouble.
Yeah, I did take a picture of UNH after it made its move. I was looking at the 5 minute time frame, and when it got to a area where it was kind of hollowed out, that's when it just took off. But the day before, something like that, when it was kind of spiky, it just kind of hung around those areas. So yeah, interesting.
I've been trying to look ahead at the next play, like where are we going next kind of thing. And I think we're going to need to rotate into stocks that will perform better in a high yield environment. If we can't get yields back down, if this bond crisis continues, we may be in this boat for a little while.
The only thing
And
I
they're,
see up is energy.
and they're talking about raising rates too. Sigmund.
Yeah. Yep. And you know, the president is completely against raising rates at all. So he's going to be throwing a fit against the new guy that hasn't even got any background yet. At least with Powell, you know, he was a part of the institution at this point. People had an idea of what they were going to get. I don't, you know, whether you liked him or you hated him, he was steady and consistent. You take a new guy and throw him in there, and then if he says anything about raising rates, the president's going to attack him. But we don't know him like we know Powell. So then we're going to have a Fed chair with absolutely no credibility because he hasn't been there long enough to develop any credibility. It could turn into a big mess real fast.
You think so? I would think that Powell would have schooled him and like give him a big fat finger if he even tries to bully you.
I just figure Powell was Trump's guy until he wasn't, and then he attacked him. And now Kevin Warsh is his guy, but if he says anything about raising rates, the president's going to attack him. And the broader market doesn't know this guy like they knew Powell, so he doesn't have the broader market credibility that Powell has. And that
Well,
means it can get ugly quick.
so it's a soap opera. Okay.
And it's possible that it doesn't turn out that way, but that's kind of the threat on the table.
But he can't do anything to him.
Just smear him in the public and trash his name and reputation and give everybody to lose faith and confidence in him. Threaten to arrest him for something like he did. You know what I mean? Like the idea that, quote, he can't do anything to him. Bullshit. He can do a lot. Get him arrested, threaten him, take him to court. You know what I mean? Look what he did to Powell. Look what he did to the last FBI guy, the guy that was prosecuting him during the first administration. They'll either just make things up, throw stuff at him, see what sticks, right? He can do plenty. Ruin his reputation. Plenty. Twist his arm, make him quit. Well,
Well,
it's not like the president's going to play nice, right? Why now? He hasn't so far. He wants those cuts. Anything that gets in front of that, he's just going to steamroll them. Am I missing something?
in
I
terms of
was
what
thinking.
in terms of what you just said,
Yeah.
I
Well,
think
I think also too
I
that
think
there's the
so.
idea of Signet that he had all these tariffs, and we also are debt. That was the big thing, from my understanding from a lot of people, is that it had to do a lot with the debt. It's the reason why he kept wanting them to drop that. The country's debt.
Yeah.
I personally believe that he's the Fed chair. The president can't touch him unless the guy commits a criminal act, out and out criminal act. He can't touch him. So he can't force him. He can't do any of those things. And even if he tried, it still wouldn't bode well for the market. I just
Well, you're right about that. It won't bode well for the market, but the idea that he won't try,
he tries a lot of stuff, but they take him to court, and guess what? They leave him alone
yeah, but this
after a
guy's
while.
new. He doesn't
Okay.
have the years of backing that Powell had, and the favors that Powell was able to accumulate, the people who had his back and was willing to stand up for him, the reputation that he had built. This is the new guy. New guy doesn't have any of that. How many members of the administration have been removed for mortgage fraud and just straight up said, I quit, but without any reason why, just silently putting their head down and walking away saying, I quit? Because somebody behind the scenes twisted their arm and said, quit or whatever the threat happens to be. And what do? They bow their head and quit and walk away.
It's going to be interesting.
But you are right. Legally, he can't do anything. That didn't stop him from accusing Powell of doing something with the new Fed building. I never did quite figure out what he supposedly did that was so illegal with this new Fed building, but brought him up on charges anyways.
And he let it roll off his back. I just listened to Powell's speeches, and he was resolute. He knew he couldn't. It was all bark, no bite, and he stayed in there. Um, I don't know. I don't see this guy being any different. It's going to be interesting. That's just my take.
I agree with that. It's going to be interesting. We'll see if this guy's got a backbone or not, and if he has any skeletons in his closet or not. What we're looking at here is the big Nasdaq. It's the Nasdaq Composite Index, so it's really big. 26,400, 1.5 trillion, 1.6, big number in volume. And the white line is the volume. It's the CVI index, cumulative volume, and we can choose it for specific exchanges. So I put it on the Nasdaq, and then I put it on the Nasdaq. And what we're looking for is if we're getting pullbacks, think of it as like net buying, net selling. And if you look at back here when the Nasdaq was selling off, they didn't sell out of much. It got sideways for a little bit, and then it broke out into new highs, and then it kind of hung out there when we were still selling off in price. Then price rallied, the volume exploded, and it's just been, hand over fist, grabbing and buying and holding and buying. We're getting a little bit of pullback, a little bit of net selling, but a minor amount compared to the levels of where we're at. I mean, this is like extremes, net buying. So a little bit of net selling today, even with the rally up that we had this afternoon. We didn't see net buying pick up. It just net selling. And what is that? The Thursday into Friday? No, it's Tuesday. A little bit of selling on Tuesday. But otherwise, the NASDAQ volume still looks really good.
It's going to be a beautiful thing when these gaps need to be filled.
Yeah, we We left a lot behind.
Well, we did.
All right, this is the B of A high yield index options adjusted spread. When you find a tool like this and you're trying to figure out how it works, find a known event in history so that you have a pretty good idea of what we're looking at. So this really high level here, that was the March, April capitulation of last year when the president rolled out the tariffs and everything was getting really bad. And then the bond vigilantes forced his hand and he kind of backed off on the tariff talk and the S&P exploded to the upside. So this is when the S&P was at a really low level and this tool was above 4.5. In the last month or so, from the March 31st reversal in through April and into May, we've had this downturn. So we got up to 3.4 and that was a pivot from back here. We reversed and it's just been dropping. So when we look at this, you think, well, what's it really a reflection of? There's some behind the scenes stuff when it comes to what we think of like liquidity, overnight Fed funds, repo, all that stuff. Think of that as this. So it's like plumbing or liquidity. Does the market have liquidity? If you've been trading in a bear market, like 2022 was a bear market, but we didn't have a lot of fear or a lot of problems. If you were in COVID, we had lots of liquidity problems. That sort of liquidity that you would hear them talk about on TV or in the Bloomberg, places like that, this is the kind of liquidity that they're talking about. Lack of liquidity is bad for the market. When the number gets higher, liquidity is thinner. And when it's low, liquidity is better. So it's kind of the inverse of what you would assume it to be. But down is good, up is bad. And with the market sitting at all-time highs right now, we're sitting with really good liquidity. We don't have plumbing issues. The overnight repos are fine. There's no problem here at all. This is like the picture perfect of healthy. So if you're thinking about long-term trades or not 9-month, year and a half type trades, but longs in whatever's been doing good, this says, why not? If we want to get more specific and think about growth versus value, then we use the growth versus value. Let's bring up something. I've got my favorite. Hunt it down here. This one right here. So mine that I like to use is this one. SLY, growth versus SLY value. It's basically the S&P growth versus value. And when it's rising, growth is outperforming value. And when it's falling, value is outperforming growth. Generally speaking, when we're in a good market, a bullish market, then growth should be outperforming. And if we want to know what bad times look like, then we find that March low of last year, the tariff terrors and all of that. And we were up here. Then we flipped, dropped back down. Now we're working our way back up again. Growth in control. We came out of that 2022 bear market. We were down, falling down through that 2022 bear market. Where is that? Through here. So January of 2022, we fell. And then we tried to rally some and then we fell some more into 2023. So that whole year it was just negative. It was down. So that's growth versus value. And we're still rising. I mean, it curled over a little bit up here, but we're not even close to making a low here, a higher low. So growth versus value looks good, but that's not the only kind of growth versus value. There's this one. This is not really all that good at growth versus value, but what it is really good for is trading the Mag 7 stocks. those hyperscalers, mag tech, monster valuation companies? Should we be looking for opportunities to trade that? And that's what this one is really good for. When it's pointed up, it's better than when it's pointed down. It says growth versus value in Russell, which I don't know why it works, but it does. I know a couple of analysts who've been doing this since like the early 2000s, and this is the one that they use for the Mag 7. They're the ones that turned me on to this thing. I had never thought of it myself. IWF and IWD is the growth versus value for the Russell. The why that works for the Mag 7, I don't know. I can't explain it, but it works and it's fantastic. Having some swag levels is helpful. So what I usually do is just like look left and find pivot points, areas to mark out. So you can mark out, points like that. Those would be levels where we got to be mindful. The white dotted line that you see is year to date anchored VWAP. We're above that, so that's a good place to be. And right now we're coming up into this pivot point 0.54. I'm a little concerned about that level, but we'll mind it when we get there, so to speak.
Signet, that D is for growth, right? And the F is value.
Yeah. If we go to IWF, that's your growth. And then IWD, that's your value. So growth divided by value. You can flip it around. I know some people who just do things backwards. So you can flip it. But if you want the thing to go up when the S&P is going up, then you want growth first, value second. But say you were charting this with the VIX and not the S&P, and then you would want it to fall when the VIX falls so that it's easier to look at visually. You could flip the two around. That way it would fall when the VIX falls and it would rise when the VIX rises. That's the neat thing about tools like this. You can make it do what you want it to do. I had a different chart that I used for IWF, IWD, and it was running with numbers at like 3 point something. So seeing 0.5 kind of has me shook. I'm like, where's my numbers? Where's my lines? Something's wrong with this IWF, IWD chart. And I don't know why, but something tells me there's something wrong. Let's kick that off of here. And I had two, so we'll go to the other one, see if the other one is still showing that weird number. I went too far. No, it's still there. Well, something's weird. Because it should be like a 3.2, and I should have my lines on here. The good thing is that the shape of the indicator isn't broken. It's just the numbers don't match what normally would be there. Maybe they changed the weighting in the IWF or the IWD recently, and then that changed the numbers. I don't know. It kind of freaks me out when things like that happen. I'm like, what's wrong with my tool? See if I can see my notes. The last time I took a picture of this thing, February of 25. I put a picture in the chat. This is from February of last year. IWF, IWD, 1 day. And I mean, if you zoom into that, you can see it had 2.1, 2.8. We got really strong in that rally, and we was at like 3 something. So I don't know what's up right now. No, it's not a minus. So that didn't help. Whoa. There's the answer. Look at that. That would mess with some numbers. Yeah, it's the value or the growth. Readjusted, realigned. I don't know. Maybe it'll get fixed. But for now, still useful. I will figure it out later. That one's got me shook. Let's see if the other ones are working. Still, it's a good way to go if you want to see what's up with technology, communications, consumer discretionary, and technology, software. Growth versus value is a good way to go. Being able to answer that sort of question of should I be long in the growth space or staples?
I use CoiFin to look at the sectors.
I love Koifin. I got so salty with them when they swapped being free.
Well, I use free. I
Well,
don't.
I know you still can, but their free used to be full service free. Like you had access to the whole thing. And I loved it because you could use every bit of it for free. And then one day they were just like, oh, we're gonna start charging. What? Why? And so you're right, you can use, quite a bit
Because
of
we
it.
gotta eat.
I got so salty that I just like I didn't go back for over a year. But it is a great platform. It has so many things.
Yeah, because I use it to find out which sectors are up, which ones did better this week. It gives you all that useful information.
It does.
I've never seen this before. How much is this something you have to pay for to get hold of?
No,
No.
you can use a large part of it for free. I'll put the link in the chat. Um, but if you want to use the more advanced tools, then you have to pay for it. And I'm pretty sure it's comparable to everything else, probably 30 or 50 a month. but that's a guess, honestly, because I haven't looked. And when they offered me a chance to get in, I had already been a member for years, and so the price they were offering me was some really lower price at the time. I bet they wouldn't offer it now, but it is a great website. Um, but when you've had something free all for years, and then suddenly they tell you want to pay for it, like, I'm not paying for that. Are you kidding?
Well, and really there's no need. Now I'm still experimenting with AI because the person I learned about Koyfin from, she used to use Koyfin a lot, and then she switched over to using AI to tell her which sectors were up for the past 5 days or 30 days or whatever, and then she would uh, go all the way to the actual tickers that she wants to that are the strongest, and then she starts setting up her trades that way. So she uses AI. So I'm trying to see which one is better.
She uses a paid AI.
No, she uses well, yeah, she uses Chat GBT. Yeah, that I think she pays I pay $8 a month. She pays much more than that. I don't think you need to pay all that much more. Um, but she uses it. Chat GBT.
Well, it's been so long since I've been here. It seems like they changed some things around a little bit, but for the most part, stuff is where it normally is.
Yeah, so I just use the I go to US equity and then I click on the sectors and it tells you which ones are you know how it goes. You can look at like XLE, XLV or how much they're up for the week or for the month or so. It'll tell you the different things like that. And then from there, you can actually look at the different ETFs and then figure out which stocks are doing well and so forth. That's the way she showed me how to use it. So
It's weird that my charts, I used to be able to go to lots of charts and it would have my indicators, my moving averages, and now I go here, I'm like, where's my stuff? I'm still salty. It's a
but
good, it's good.
yeah, but they've gone up in price, so I could see that. They're expensive now.
Free was awesome.
Free still is kind of awesome, at least for what I use it for. Um, it's still pretty good. I'm just not paying 40 but 50 almost $50 for stuff now.
Yeah, nowadays, I mean, a $50 subscription can get you into some pretty good places. Hey, my data cables came in today. Yay.
It's getting to be a little daunting out here to keep up with stuff. I gotta say, so many different tools out here. I'm looking at videos now how to use Notebook LM. Thanks for Notebook LM, by the way. I'm learning it. That thing is badass.
There's so much you can do with Notebook. For real. I use it every day to compile reports.
I took and jammed with some videos because I really want to get good at a particular skill, and I tell it to take all of those videos and make it as simple as possible, and it cranks out these infographics and all this other stuff. I'm like, ooh, this is fun.
It is helpful sometimes to just step back you know, and get back to the basics. The Mag 7 is the dominant players, and as long as they're not bearish, crashing and burning, then the broader market should be okay. And you can use mags for that, right? Instead of trying to correlate all of them individually. MAGS, it's just an ETF that puts them all together. And then from here, you know, if they're doing okay and they're not running into a resistance level, or they're not overextended or in some other way looking shady, then the broader market should be okay. So we did just come into a serious resistance level. We're dancing on it right now. But if we get above 69 in a clean, solid way, then we should be good.
It was beautifully blooming. And now you just look at the bottom of the tree and there are all these little pits from basically free feeding the squirrels. So mostly peppers and tomatoes. Great. And my mom's a big gardener. She had cucumbers one year that tasted like the bomb.
Okay.
I've tried to do some here. Jalapeno
That doesn't
peppers.
sound like her mic, so I'm gonna mute her. Like she was playing something in the background or something.
Yeah.
So you got the mags. As long as they're doing well, the broader market should be okay. If they are double topping or putting in bearish patterns or just straight up falling, then you need to be mindful of the broader market. Otherwise, look at the S&P and the NASDAQ. So SPY and QQQ. And as long as they're above all of their major moving averages, but they're not, you know, crazy overextended, then we want to be long the market. That doesn't mean we need to run out and buy everything out there. Just that growth should perform better than value, and you can selectively start trying to find opportunities that fit your needs. I like to have a diversified opportunity. So I don't want just things that are breaking out or just things that are bottom fishing plays. I go through, I'm picky. I really am. So if I'm looking to trade it, I want liquidity. I go through the options on the things that I want to trade and see, are these options any good? And if they are, there's my watch list. On that list, I can go through each chart individually and just look at, what do I have? Is it new highs, new lows, breaking out? Is there anything here that I can trade? And if it's no, then I just flip to the next chart. And I've talked to a lot of people about this over the years, and like, oh, it's so tedious. You're going to go to every single chart and look at it. Yeah, that's what I do. Say the Dow Jones, it's 30 stocks, man. You know, and on Thinkorswim, you can just use the arrow key to go from one chart to the next, to the next, to the next. So I put it on, say I want a 3-day trade, a 5-day trade, a trade just using next Friday's options. I put it on a 10-day chart, and over on the other chart, you got the bigger picture so you can see what's going on. But this chart is a 10-day chart. If I'm looking for a next Friday's options, then I can click on my watch list and just use my arrow keys, and I can jump through every one of these charts. And if I see something that gets my interest, then I can use another chart, zoom in, take a look at it better. But otherwise, I can just move through the list relatively quickly. And if you can't look at 40 different trade strategies at a time, then start with one strategy, like morning star reversals or evening star reversals. So you bring up the chart and you say, that's not a morning star. And then you just flip to the next chart. That's not a morning star. You could go through all 30 stocks. None of them had a morning star. So then you think, all right, well, I'm going to do IX10. And you start over at the top and you flip through them. You can go through 30 stocks in less than 1 minute looking for an IX10, because if you don't find it, you move on. Like, nope, no IX10 here. Go to the next one, go to the next one, go to the next one. Because it's either there or it's not. Moving average bounce, breakout to new highs, all-time highs, whatever it is that you're looking for, you can flip through that list, 30 stocks in 1 minute. And if you didn't find stocks breaking out to new highs or whatever you're looking for, then you reset it and you look again. I used to do it that way, but now when I look at a chart, I don't look for just one thing. I'm not looking for new highs, IX10, whatever. I'm looking at, what do I have? and then I spot whatever it is. I have an IX10 here, or I have new highs, or whatever I have, or what could I have on Monday, so I can add it to an action list for next week. I found that to be more helpful than trying to scan for stuff, especially the what do I have that could benefit me next week approach. Because the scanners just can't do that. All right, I gotta read something here for a minute. Da, 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 da. And this one. Notebook LM is the one that you're looking for.
No, she mentioned one Signet a while back that actually you can drop YouTube videos in it, and it gives you something. I just can't remember the name of it.
Oh, that's right.
Infographics. Yeah, it does some amazing stuff. And also you can make a video on instructions, and it's crazy. You could tell it to do certain things. It'll make a video for you. It'll make a podcast for you. You can have two people talking together about what you're trying to learn, and they simplify the way of learning it. It's crazy. I mean, I was up till like 3 o'clock in the morning messing with this thing. And the infographics is phenomenal. Um, it's it's amazing. I have to show you guys one of them. I don't know if I'll be able to do it quickly, but
Can you drop in the website and in the chat?
yes, Notebook NLM Global. Okay, I'll do that. Yeah.
So
Where
if
is
you're
it?
hung up on some idea of like, well, what do I want to swing trade? I know I've said this before and it kind of confuses people, but find what you would love to have traded if you knew it was going to happen. And I remember I had a coaching client and he was like, I want this really big move. Like, well, okay, it needs to be something that you can see coming, right? Like most tradable opportunities come from a setup, something that we can identify as like, well, it has a possibility of going higher, it has a possibility of going lower. It's all probabilities. We don't know for sure it's going to make this big, outside bar 70-point run, but we do have an idea that it's at support, it's at resistance, it could break out, it could break down. And if we can skew those probabilities in our favor, get some edge to it, and then control our risk, we have an opportunity to trade. It always comes down to, are you willing to risk that much money? Because I mean, if the trade risk is 1 penny, I'll trade everything. I'll trade anything because I just don't care. Like, well, whatever, it's a penny. Why do I care? But if the risk is much greater, say thousands of dollars per trade, I'm going to be way more cautious and specific about what I get in, how I monitor it, what I need to be able to take that trade. So everything is tradable. But I'm looking for very specific signals, like my bear flag failure play, for an example. I really love that trade when I can find it. When I do find it setting up, then I start watching that particular stock, looking for an opportunity to trade it. This isn't a great example, but I'm going to use it anyways. Here's the bear flag on Apple, and it was presenting as a failed bear flag. That's what it looks like before it fails. And by failure, I mean it ends up going the other way. That's a bear flag would continue lower. It's a failed bear flag. It went back up and it ended up forming a cup and then a handle and then it continued higher. I love it. So that kind of trade setup, when I show people that one, they say, well, how do I trade it? How do you trade it? What are you doing with it? Once I begin to identify that it might possibly be a bear flag failure, I snap my fib lines on it. Now, for the sake of the video, because I know there's probably people watching who don't know how I run these fibs, I don't normally go all the way to the bottom like that. Normally, I would have used the body here, or say that last body there before the opposite candle color. And then we were dancing around that 111 and we finally reversed. With that setup, there's my 786. And we are validated above that to get to the half, which we reacted to. We had that red bar down day. Then we got a Busby off the breakout of it. We finally made it back to the top. We responded there. Everything played out. But where do we trade this? Well, when I'm setting this up, once I begin to think, hey, I think there's a bear flag failure forming. Well, I would love to get in all the way down here. Good luck with that, right? A lot of these moves happened in the pre-market or after hours. You wouldn't have been able to trade them with options. But I try to identify the day before, say 2 o'clock, 1 o'clock in the afternoon, where could we be tomorrow or what could happen tomorrow? And then I set them up on a watch list. So on this one, that day we were closing, we were under the 1. We had already tested the 11 back here. And it wasn't hard to think like, hey, what happens tomorrow if we like gap down into 111 and fail that gap down and then we rip up the next day? Well, we didn't gap down, right? We ended up gapping up and then falling down more. But you can play the what if scenario. So you could have been waiting here, looking at Apple the next morning, going, hey, did we gap down to get that rally day? No, we actually gapped up. But but we could have been waiting for it because that would have been a setup. It would go to my action list so that tomorrow morning I would be looking at it to see, did we gap down in the pre-market and land on that 111 for a good reversal? And if I see in the pre-market that it's not gapped down at all, in fact, it's gapped up, then I'd be like, all right, well, whatever. I won't look at it until late that afternoon. And if you had looked at it that afternoon, now where are we? We got underneath the 111 and we were rallying back up into the end of the day and we closed basically on the 111. So then, it's 2:30, 3 o'clock in the afternoon, you're looking at Apple, it's back at the 111. You're like, man, what if we finish this rally back up tomorrow? Say we gap up, we keep running, where are we going? Probably going back, to the previous high, back to 786 area. That could be an opportunity to trade it. So do we wait till tomorrow? Heck no, we go ahead and take the trade that day, right? Why? Because we're already on the 111. We had started the reversal back up. We're close enough to the lows that we could use a smaller stop, right? We could use like the 245 contracts on the options. And we could defend this. We could get like an at the money vertical or something like that. I like those kind of plays, those at the money verticals. And if it gaps down on me the next day, then I take a small loss because I got in at the money, take the small loss, get my hand slapped, and I move on to the next trade. But if it starts to perform, I'm already in it. I didn't wait for the next day. If you did wait for the next day, it opened, gapped up, and then it faded a bit, and then it rallied. So there was an opportunity to get in it. But as long as it's behaving like the failed flag should, then now you got the play. So you can go find the trade setup that you're looking for and start asking questions. How do I find this again in the future? When I asked that question, I didn't find a lot of answers other than to manually go look at it and do it. I can't get a scanner to find my failed flag. It'll find a bunch of other trash that I have to sort through. And if I have to sort through everything anyways, I might as well just do it myself.
Okay.
So then when you're flipping through the charts, if you don't see something that you want, then you just move on, right? Um, Start small, write out a list of strategies that you want to play so that you have a checklist of them. Start to identify the tradable signal, what you could use and how you want to use it. I don't wait for confirmation. I'm not a confirmation trader. But if you are, then write that down, have that as a part of your checklist. Amazon, for an example, has a gap overhead and it's inside of this really big bar. I might be looking at something like Amazon and thinking, okay, if on Monday we open above this gap line that I drew, then we could try to reclaim the top of this bar. If I was thinking that before we closed because of today's hollow red bar, I might have wanted to go long today, not waiting for the gap up on Monday, but getting in it today. If I'm wrong, it'll open down, take a small slap on the hand, and move on. Try to set alerts on things and use notes. So while I'm sitting here looking at Amazon, that low that I marked out of this bar, I would really like to get long in Amazon around that level. That makes it a really good spot to set alerts. Of course, you can also just put it on your action list. And that means every day you come in and look at it around 2 o'clock or so to see if we're near that box. Because if we come down near the box, say we're down here on Monday's close, and it's another red day to get us there, we might be looking at that Monday afternoon saying, Tuesday, we could open gapped down on that and then get a rally day and come ripping back up to the upside. And that would be a really good entry opportunity. And so then I'd be looking at it really close for Tuesday morning to see in the pre-market, are we gapped down? Is this setting up for me? So that I've already got a plan in place. All of this is connected to a specific pattern on the chart, a setup or an idea that can't necessarily be coded into some scanner like FinViz and Thinkorswim and TradingView. Some of it can, but a lot of it can't. So I just do things manually, but I get better outcomes. You just have to have the time to be able to do it and a plan to get it done consistently and not forget. I don't know about you guys, but I'm easily distracted. Oh, squirrel. It does help if you can try to qualify what you should be looking at. So we're like, Caterpillar, no, that's industrials, machinery. We're looking for growth stocks and technology and consumer discretionary. We don't want that. Or Boeing, for an example. What do you guys think of Boeing? They go to China and the market says, oh, if they get a China contract, it's going to be like 500 planes. And so Boeing gets bid up. And then they go over there and they only get 200 planes. And so they give Boeing the smackdown. But they had no contract when they went. and they came back with a 200 plane contract. That's a good thing. And the market still kicked them in the face and said, well, we wanted you to get a 500 contract and you only got a 200 contract. So we're going to sell your stock, give you a kick in the face.
Wow.
Kind of crazy, isn't it?
Yeah, because those motors, I believe the headline said there was going to be General Motors, right? Like the airplane engines. So General Motors is going to be getting money out of this, or a contract deal for 200 planes. Who else? You know what I mean? Like, what about the gadgets and the gizmos inside the planes, or the tires on the plane? You know what I mean? Like, who
Yeah,
else is gonna?
hydraulics.
Yeah,
Yeah, all kinds of
hydraulics.
stuff.
Yeah. So all those companies are going to benefit from it. I think the market is reacting a lot like an earnings reaction, that it's a knee jerk screw you move, but within a week, I wouldn't be surprised if it rewinds itself. Because it really is a positive. They just got salty because it wasn't as good as they had anticipated that it would be.
I don't think anybody knew what they were originally going over there for, other than just to show. You know what I mean?
In the first Trump administration, Trump went over there and got Boeing a deal. And so this was supposed to be the opportunity for Trump to get Boeing a deal again. But I've tried to figure out where the 500 number came from, and I still don't have a good answer, other than it's sort of a mix between what they got last time and what they could get this time. But still, it was like some swag level off the cuff, somebody just randomly trying to swag how many planes they can get. And then they got salty when it wasn't the right number. That's silly. So I am watching Boeing for that reversal higher. And if I can price a long trade cheap enough that suits me, I'm probably going to end up getting a long in Boeing.
You think it might bounce off of that 200?
Yeah, I wouldn't be surprised if we cut the 200 like we did back here, where we cut underneath it, but we came back up again. Something like that.
Mm-hmm. I see it in my demand zone, so I think next week it'll reverse.
Something like the 1, 2, 3, 6 reversal. You know, if I was to measure this or that, put that 111 and 1, 2, 3, 6 down there. But as for Boeing, I'm looking at it as a long. I think the market's just a little salty, but if this reacts like an earnings announcement, then they're going to forgive it. Or let's say the other traders that did appreciate the 200 contracts, they're just going to take advantage of the dip and buy more. It was just those ones that were paper hands, short-term traders. They thought they were going to get a quick shot. They dumped it when they didn't come in with big numbers. What do we
Or
want to
maybe
call the
or
value
maybe
players?
drop down to the 111. I'm measuring from the yesterday's candle and to this candle. Maybe if it pulls back a little more to the 111 and then bounces from there.
Yeah. Either way, I'm looking for a bounce in Boeing, whether it's 217, 215. I won't get hung up on it either way. Looking for that reversal should get us up into like 237, 240 area. That'd be nice. Bare minimum, close the gap at that like 229, whatever that is.
Have you ever traded Boeing before?
Oh yeah.
This one, it shakes me out too sometimes, so we'll see.
For a long time, I refused to trade Boeing after they killed all those people.
Yeah.
From like a principle standpoint, but I got over it. I just was really frustrated with them. They wiped out generations of people and, but paid a fine, hand slap, moved on.
Pretty sick. I like that doji on Amazon right now. I have to see what it does next week, but I love it. I like that doji.
I got some kind of little spinning top candle. I don't have a doji.
Oh, yours doesn't. I'll show you what I see. It's weird how things. But mine does after hours trading too, so it shows it the way it looks right now.
Wow, yeah, yours looks way different. I wonder if I turn off my overnight, if that would change anything. Nope.
Mm.
But it
And
looks
it's
like that's what yours is that it turned off the overnight.
yeah, and then it's sitting on the 20-day moving average, and it hasn't touched the 20-day in a while, for a while now, on the daily. So I'm hoping that it'll bounce right here. And even if it goes down a little bit more on Monday, that would make me happy too. I'll buy more.
You know, it's funny. I didn't know you had to actually make adjustments in TradingView when time zone changes.
You didn't know that you could do that?
No, you have to.
Oh,
Because it flips between UT C5 and 4. We're in 4 now, but when we're in the other whatever that is, it'll flip to 5. It flips. You need to flip it to 5 or something like that to be on the correct thing or something of that nature.
nuts.
That's what I've found with it, anyways. Big gap in that, huh?
Oops. I do like TradingView though.
Any reason why they opted not to trade options or allow options?
I hadn't heard that they made that decision.
No, no, no. Like up until now.
Oh, I've never read anything about why they came up with that decision. It was likely just a lack of data integration. I haven't even used that Copilot on TradingView.
Kim, that thing I was looking for was way in video. That's the one you
Oh,
recommended.
yeah. Yeah, that's when you can't summarize. YouTube doesn't do a summarization. It'll do it for you.
Right. That's what I was looking for.
Oh, okay.
So if you guys see this little table that I have on my tick chart, I
Yeah.
was
That's
talking to,
nice.
yeah, I was talking to somebody the other day and they're like, hey, you need to use this. And they told me what it was called. Well, they sent me a picture and I could see it, right? So I typed in equity market breadth, nothing. And I'm like, dude, is that private or something? I can't, I'm not seeing it. And he's like, no, just type in pristine breadth. You'll find it. Like, okay, I didn't see that name. So then I typed in pristine breadth. I still couldn't find it. And dude's like, can you read? Like, okay, you're going to go there, right? Well, I'm an idiot. And he's like, type it in. So He's like, you're misspelling it or something. Well, okay, I know I'm a really bad speller, but I typed it in correctly. I did everything. I still couldn't find it. So he shared a link, and then I got it. No problem. But when I was hunting for this, I could not find it anywhere. So that makes me think there's some issue with TradingView. If you hunt for an indicator that you know is supposed to be there and you can't find it, change your platform. Like go to the web version, and if you are on the web version, go to the desktop version. See if that helps, because this thing was just not there at all.
I've had those issues with it too.
It's weird.
So you went to the web and
I used his
Desktop.
link, and his link sent me to the web, and then I found that one and the other one made by the same person, this pristine cap guy, which is why all his indicators have the word pristine in them. Pristine volume analysis, relative strength, and breadth. Now, this breadth, I believe on the explanation, if we go into the explainer about this script, it has that. Yeah, that's what he had sent me to. And I was like, okay, that looks pretty cool. So if you guys aren't using this, I have been using it and I like it. There's only one problem, and that's the tick that it's using versus the tick that I use. But I put them both on there, my tick and that tick, and that way I see both ticks. So other than that, the red area where it says weak breadth here, this is actually an analysis of the breadth. Why? That's hard to read. Let's change that. This is an analysis of the market breadth here. So it's going to read your advancers and your decliners, and then it's going to rate it as weak, mixed, or strong, and it'll change colors, and that'll be your weak breadth, mixed breadth, or strong breadth. Then your NYSE advance and decline. Then the trend, which is just a math formula. I've got an article on the Bullish Bears website about that. And then you've got the tick chart. TradingView has two tick charts, the one that I use and then the one that this indicator uses. If you see, my tick says minus 394, their tick says -2. So we'll just come over here, and I'm going to hijack my VIX indicator for a minute. Type in tick, and we got the cumulative tick. That's what I like.
Nice.
Yeah. And then we've got the NYSE tick, but not cumulative. If I put that in, nope, that ain't the one. Hold on, there's still another one. Another one. This one with the dot Y. It's at 3 right now, -3, -2. Now this one's -2, right? This is what that one is using. It's the NYSE tick.NY. And that's fine. I don't have a problem with that, because now I have both. I have that one in the grid, and then I have mine on the line graph the way I like mine. This is what I wanted to see. I checked it against my Thinkorswim. The values that I'm showing in the grid or on the chart is exactly what I want to see, -394. And so having that down here, it suits my needs. But I did want to point that tick chart versus the tick number so that people weren't like, why that doesn't match. That's why it don't match. But it doesn't bother me.
Did you ever share the rest of these, your updates on these?
Yeah, I shared this chart last week. The only thing that's different is I added that.
Okay, so these are still, they're in your morning video though, right? Still? The morning video?
I believe I shared this one right here in the chat. I didn't put it into because this isn't, I don't use it in the morning briefing.
Got it. Okay.
So I didn't add it to the morning briefing list.
Can you share this one with us?
Yeah, it's in the chat.
Oh, yeah. Oh, okay. I was looking at it, the Zoom thing.
I shared it like Monday.
Oh, but does it have that little box there, that table?
No, I added that yesterday.
Oh, okay.
I think if he saves it, it'll be there now if he had shared it. That's you know.
It's supposed to update any changes that I make.
Yeah. Yeah.
It's supposed to. But after going through that with that guy this week, where I could not find that indicator, and I mean, I was starting to feel like an idiot, you know, like it ain't there, dude. He's like, yeah, it is. I'm telling you, it's right there. I'm
I've,
like, it ain't there.
I've had
So
that happen too. I think there's some type of glitch in their program, and I know people have made complaints, and they got pretty nasty with them. So you got to be careful on what you say to these people.
They
I don't
do get
know.
nasty. That's why I don't publish indicators here. I'll make them and give you guys the code all day long, but every time I've tried to publish, they send me this nasty letter, and I'm like, I don't need that. You just take it. So
Who owns this program? Where's this
no,
country? Or who is it? Is it a U.S. based company that owns this?
I have no idea. I just know that they're rude as hell.
Yeah, yeah, they are. I know people who've done coding, and they've had issues, and they actually took out all their scripts. Didn't even notify them. They just kicked them out. Luckily, they had everything backed up where they, copied the code over to Notebook. But yeah, this company, whoever this is, these people can get really nasty.
Yeah, the indicators that I make, usually I take an existing code and I change it to suit my needs. And then when I would do that and try to publish it, they're like, this indicator already exists. You failed to make that check before you publish this. And if you do it again, we're going to punish you with, I'm like, what the hell are you talking about? You know, like threatening me. I'm a paid user. What are you going to do? Remove my account? You better give me my money back. So I don't publish indicators. I just share the code and let people make them, because I ain't going through that drama. Life's too short.
so Signet, the weak breath and all of that, the tick chart, they're basically just isn't it the indicator just basically showing you what you already see on a chart?
No, the advancing minus the declining is not this tick value of 12, right? Tick is different than advancing and declining. Although it's the tick is telling you how many just ticked up, how many just ticked down. The difference is advancing and declining is how many are above 0 today? Oh, that's advance. How many are below 0 today? Oh, that's decline. See, that's different. So if I have 100 names, but I mean, we know it's more than 100. I'll just use 100. If I have 100 names and 76 are declining, that means 76 names are below their open or below yesterday's close. They could be rallying full strength, but if they're still below yesterday's close, it's going to count them as a declining stock. It won't matter that they're rallying because they're still below yesterday's close. But the tick will say, oh, it's ticking up. We've got, 25 names ticking up. This very second, this tick is ticking up 25 names. And that's different than 23 advancers, right?
Okay.
So it is 2 bits of information. Now, the weak breath, that word in the middle is reading your advancing minus the declining. And since we have 74 decliners or 76 decliners, that's weak breath. So we really don't need that weak breath label there in the middle because we can see that 76 is way worse than 23. But if you're like me, I want to glance and move on. I don't want to necessarily read the numbers. So if I keep this scrunched the way that I normally do, I can see a little bit of my tick and I can see that weak breath. I don't even have to read the numbers. I can just see it's weak. If I want specifics, then I can read the numbers and be like, oh, wow, 76 versus 23. Yeah, that's weak.
So I could take that and look at a number of days we've had weak breath and then make a decision on how I want to move forward with my trading. Sounds
Possibly. I use it on the intraday. I don't use it on a daily, so I don't know how it's going to read on a daily.
Gotcha.
For that kind of measure, you would want to use an advancing minus declining issues chart so you can put it on a daily and look back over days and say how many days were weak breath, how many days were positive breath.
Okay. Got it.
See, this has been my issue with the advancing minus the declining issues. This has been a problem that I've struggled with for a long time. Not really a problem, but like I know that it's an issue, and so it bugs me. If we look at where Amazon opened today, it was below yesterday's close. So it counted as a decliner all day today, but it rallied and it closed at the high of day. But all day today, this was a declining issue because it was below yesterday's close.
Okay.
So that's misleading, you know?
Mm-hmm.
Some of the newer models will look at where we open and then it'll say, is it a decliner or an advancer? When it was below the open, it was a decliner, and then when it rallied above the open, it was an advancing stock into the end of day. And I like that better, but it's still a little misleading because we are an advancing stock, but we are still below yesterday's low or yesterday's close. So now it's an advancer, but it's a broken advance and we're below yesterday's low. That's why I like these trend candles so that I can see today's hollow red. Hollow red tells me it's red, but we closed at the high of day.
Mm-hmm. Mm-hmm.
So the advancing minus the declining issues fails in that regard. It doesn't tell you the whole story. And if I didn't know that, and I would see that declining number or advancing number, it can be misleading. It's like 23 had 76 decliners. Oh, wow, I should be getting short. And then you go in and you look, Apple and Microsoft and everybody was rallying this afternoon. How can we have the Mag 7 rallying in the afternoon and have 76% decliners? Because they were below that yesterday's low. But the tick, on the other hand, every market has a tick. SPY, the Qs, everybody. The problem is equities make 1 penny as a tick. So every second we tick up, we tick down, or we don't move at all. But that was a tick. So every tick of the NYSE tick is asking, hey, how many stocks just ticked up in the last whatever time frame you're using? And then how many ticked down, which is different than advancing and declining because it's looking at where did we open today versus yesterday's close. So the tick is much more handy on the intraday to give you that feel for, are we bullish? Are we bearish? And there's a tick for the S&P, for the NASDAQ, for the NYSE. They all have a tick.
Is there one for weighted AD too like that? Or is it just the same for all of them?
The weighted AD was made by shadow trader Peter Resnicek. His coders made it, and then they sold it for TradingView and Thinkorswim and Tasty. So it's not a advanced decline line at all. If you look at the code, it's actually looking at sectors, the XLI, the XLF, the XLP, and it's asking how many of those are up versus how many of those are down.
Got it. Okay. So it's all basically which are in SPY. So
Yeah.
it's yeah. Okay. Yeah, it's interesting because I've always wanted to understand this better, and you're actually doing a great job at explaining it, and I'm appreciative of it. The tick and all that. I always knew it was like a tick is every tick, but I just never thought of it in what I guess it's in the futures mainly. So
Yeah, when I was trading futures, tick was really the first time I'd ever really heard of that other than like a tick chart. And then when I started studying tick, I found out that everything has a tick. And I'm like, wait, what? I thought futures had ticks. But like, everything has a tick. I had a really good blog post that I wrote with the Bullish Bears. And it's one of the first blog posts that I had ever wrote. I couldn't publish on their website, so Angel had to publish it for me. But I did do a tick article on the Bullish Bears. And then I've got one on my
That's
website
nice.
too.
And that's the Bullish Bears? I have to
Yeah,
check that out.
I'm not seeing the one that let's see, what is your
I thought I
tick?
saw one with
I
your name
saw,
on it.
yeah, I did
Yeah,
too.
it's down. You passed it. Keep going. Saying it's down
There it is.
right there.
Yeah, that's a decent one. This looks like a video though, but there's a blog post that I did for them, and it's published under Angel's name, but it was my write-up for the tick and the trend. It kind of went into a lot of detail on the math behind the tick and the trend. But on my website, not this one. That's the wrong one. Wrong one. That would be this one. Blog posts. I have two articles that I wrote here. They kind of go together. Day trading with the C tick and the tick. And in these two, start with tick first and then read the day trading C tick. I believe that's the order that I wrote them in. These two will go into really good detail about the tick, how to use it, how to set your charts up to see it better, and what it is. But I know I have one on the Bullish Bears too. It's just published under Angel's name because I didn't have publishing permissions. And I shared indicators in those blog posts so that what you're seeing, there's a link that you can use to download those. I don't use them, but I had people ask, like, where's that indicator? It's in there. Yeah, here's the code, simple tick.
See, I know it's getting late. I was just going to ask you one quick question. What platform is that you're using, right? When you go back to that one page that's got all the boxes with all your websites on it. Yeah, that. What is this?
Start me.
I'm sorry?
Start me.
So is this like a Google or something?
It's a widget or a plugin for browsers. I've got it on multiple browsers. So the browser that you're looking at is Opera GX, but I've
Okay.
also got it on Chrome, and I've got it on the Microsoft Edge. The plugin is called start.me.
Okay.
It's not free, but it's such a small amount of money that I happily pay it every year. It's like, I don't know, $20 a year or something, really small, like I happily pay that because
Yeah.
it's got so many things. This is my notes page, and whenever I just keep this as a template. But if I've got a project that I'm working on, I will copy my template and then start putting in my notes, my labels, all of that. So this is just like my new project tab. It's got intraday trading hours. So Hong Kong, London, New York, Los Angeles, my hyperscalers watch list, the indexes built into it with my crypto link. If I want stock market stuff, I know this seems like the same thing, but it's not quite the same. My YouTube playlists. So if I need my Thinkorswim setup or whatever, if I've got notes about new projects or ideas, I'm telling you, I love this thing. I use it all the time. Economic data. These are like RSI links or RSS links. Investors Business Daily, Zondu, whatever,
Did
Fed
you
data.
create those, or is that in it?
No, I
Is
made
that
these.
actually? Oh, okay, okay, you made it. Okay.
Yeah, but you can make so many things,
I didn't know
Wow.
you were familiar with Qual Maggie.
Be surprised.
So do you know who Qual Maggie learned a lot of his trading style from?
Uh-uh.
Do you know a guy? Oh, well, his handle is Stockbee.
Uh-uh.
Oh, Pradeep, you don't know him?
Mm-mm.
Okay.
If you're looking for another tool, this is called Raindrop.io. It's also an app that you can download to your computer, probably on your phone and tablet too, but it's a bookmark tool. So this thing is just full of bookmarks, and I can organize those bookmarks into folders, files, notes. I can add to them by that. I can search for things, give them tags and keywords. I can export my list. This thing is fantastic too.
There
That
used to
way,
be something. Yeah, there used to be some type of a folder app that you can actually get years ago, and I used it forever. I loved it. It was just like this, exactly like this.
yeah, this is a downloadable app that you can get, but I've got it on the browsers too. I love this thing. Like, there's sites that I'll go to and I'm like, man, I don't have time for this today, but I definitely want to come back to this. I bookmark that sucker into this, and then I've got it forever. I can come back, find it later, because there's some really good stuff out there, and I just need time to be able to go through it. So I add it to my list. Raindrop is pretty awesome. Every morning when I do my morning briefing, there's my list. And all I have to do every day when I go to start is I just right click, open all links, and it'll open all of these for me so I can do my morning briefing.
Wow.
Yeah, it's pretty handy.
Rain,
Just boom, and it loads them.
raindrop and start me. Okay, that's neat.
Oh,
All right, guys,
okay.
we'll wrap it
Great
up.
Thanks.
session.
Yep.
Yeah. Great session.
Hope you all have a good weekend.
Yeah. Have a great one.
Oh, Kim, real quick, did you find that app that I told you about helpful for
Uh,
trading?
yeah. A month or so back,
Yeah.
it was pretty good. But it uses